So, brief intro in terms of what I want to talk about today. At 91, we're long-term investors. We take a 5 to 10 year view on businesses that we like investing in. We're looking for businesses with deep moats or high barriers to entry. We like businesses that can grow, and that's so important in the current SA environment. And we like cash. We want our businesses to generate a bucket load of cash, because earnings is effectively an accounting concept. You can have a very profitable business that doesn't generate a lot of cash. Cash tells you about the true health of the business. And the current environment, over the last year or so let's look from the depth of the COVID crisis, in South Africa, resources have done incredibly well. We're all aware of it, right? I really enjoyed listening to Chantal, for example, about BHP Billiton, but so much is in the price already. In the industrial sector has done really well. We've seen how the retailers have recovered over the last year or so. But it's the financial sector that has lagged. And a lot of investors are talking about the banks right now, but there are actually 3 stocks that I want to talk about in the financial sector that are away from the banks. They've all underperformed recently, and we look at these 3 stocks and we actually think they're very attractive. So the first stock, and I'm a little bit nervous about doing this, but I'm very excited. The first stock is the JSE, and I'm a little bit nervous because I've got Val on the call, and Val, obviously being inside the JSE, knows this business a lot better than I do. So what does it do? Hopefully everyone on the call is familiar with it. It's the main exchange in South Africa for trading equities, for trading bonds, for trading derivatives. It's effectively a multi-asset exchange, and recently it's underperformed. So why is it underperformed? The market is worried about growth in South Africa, and the impact of that on the JSE is the market is worried that value traded is not going to grow. The market's worried foreign investors are, let's say, going back to the US or going back to developed markets. There's not enough capital coming to South Africa. And then the other issue that plagues the JSE on a consistent basis is there is a lot of forecast risk in this business, because the value traded in the business is very hard to protect. So why are we excited about it? It's unique. We like the defensive properties of the business. Put another way, it's an anti-fragile business. When stock markets fall, think about the global financial crisis in 2008, the COVID crisis last year, JSE earnings and revenues go up. And that's a fantastic stabilizer in a portfolio. We used to be even more excited about the business when it was a monopoly a couple of years ago, or actually 4 years ago, but a competing exchange has been introduced, and that's eroded the competitive power of the JSE. But over the last 4 years, the JSE has lost less than 0.2%. I'm going to say that again, lost less than 0.2% market share. Now, in global markets, typically, a competitor takes about 15% to 20% market share. And even building in that market share loss, because we still expect that going forward, the JSE is very, very attractively priced on the market. Extremely cash generative business, converts more than 100% of its earnings to cash, rock solid balance sheet, and you're being paid to wait. What do I mean by that? It has a dividend yield of 6.5%. And even more exciting to us, you now have a management team that are actively seeking out new avenues of growth like data sales, because that's what exchanges across the world are doing today. It does, of course, come with risk. It's a fixed cost business, so it needs value traded to grow, or it needs new revenue streams. New revenue streams management are focusing on. And in terms of value traded growing, I got really excited about this initiative because this is how we get more individual investors buying and selling on the JSE. What's the valuation? We think it's worth about 160 Rand a share. It's trading at about 108 Rand when I last checked today. So you've got about 48% upside to the JSE at present. Second stock I want to talk about, I really feel like I'm running out of time, so apologies if I'm going a little bit fast. Santam. Another well-known business, a lot of brand recognition. It's a short-term insurer. Hopefully most of you are aware of it, either through car insurance or household insurance. It's been in the press a ton recently because, of course, there's been so much contention over the business interruption cover that is provided to businesses in South Africa during COVID. It's underperformed. Business interruption claims were the big issue for investors. Santam provided 1.7 billion, but there was uncertainty around that. The number could be higher, the number could be lower, but there's certainty now. The courts have ruled Santam owes 1.7 billion, which is already paid, and the additional capital it's provided doesn't actually need to be paid out. So why are we excited about it? It's about the data, it's about the underwriting experience, and it's about the size of the policyholder base, because these three elements act as the moat. It has dominant market share. And better information means that Santam can price better than its competitors, it can retain the good risks better, and it ultimately delivers better profitability to investors. My Way business, launched a couple of years ago, it's a direct business, takes outsurance head on, and will ultimately allow them to generate higher margins like the JSE, extremely cash generative, rock solid balance sheet, and you're also, once again, being paid to wait, dividend yield of 5%. Very conservatively run business, it grows in line with nominal GDP, and outside of the COVID period, it's actually had a consistently growing dividend with a number of special dividends being paid out, given how well capitalized it is. And in fact, I forgot to say that about the JSE. JSE also likes paying out special dividends. Risks, of course, exist in this business. Think catastrophes. So think fires in an area like Knysna. Think hailstorms in Gauteng. So you need to allow for a bad year every once in a while. Think 1 year in 7. What's the valuation? We think it's worth about 300 Rand a share, and it's trading at about 250 the last time I looked, so about 20% upside. Last stock example I want to give you today, or recommendation, or stock I'm excited about, Discovery, another insurance business. Why are we excited about this business? It's a disruptor, incredibly entrepreneurial. You heard about fintech. Discovery is insurance tech or insurtech. So they've been best known for medical insurance. We all know the Vitality product. They've been expanding into life insurance, investments, and now banking. But Discovery too has underperformed. And you've seen that underperformance over the last year or two. Two things: market's very worried that medical aids will disappear when national health insurance is introduced in South Africa, as the regulations or proposed regulations currently stand. And the business is in a huge investment phase. You've seen the launch of the bank and there are various other initiatives. Now, Discovery over time has used the Vitality product to gather data and crucially understand how the right incentives drive behavioral change. Now, you can understand or appreciate that this is very important in an insurer because you've been able to use these incentives to make people healthier, decrease their risk of death, their risk of morbidity. And the end result is that Discovery ultimately runs a much lower insurance book. So it's much better for their shareholders. They've been gathering and refining this data for about 20 years now, let's call it. It's a unique IP. It's now being globally recognized. There are insurers across the world that actually want to partner with Discovery so that they can improve their own business, and they pay a fee to Discovery for this. This is translated into relatively strong revenue growth, a lot stronger than a lot of other companies in South Africa right now. And we think that this growth has a long runway, many years to come. So you've got another SA business now. Think about that long line of SA businesses like South African breweries, for example, globally competitive. And it's one of the few strong growth stories in South Africa that investors have access to. So there's still risks. Management is still investing in the future. There isn't a significant amount of cash generation. The cash is going into these new initiatives. What is the valuation? Lots of moving parts. We think 150 Rand a share. The share is currently trading at 135 Rand, so about 11% upside. A couple of things to keep in mind. Lots of optionality in this business because management team is incredibly entrepreneurial. And at present, we've got a zero value in the bank because it's going to take time to scale. And I hope I didn't go too quickly there, but Val, thank you so much, and back to you.
Without showing any bias, great stock picks, Sumesh. But maybe at this point, I should read out the disclaimer. So just to flag, the views and opinions expressed represent the personal views of our speakers, and the JSE sponsorship and facilitation of the session are not an endorsement of the views expressed, nor does it constitute advice by the speakers